Welcome to The Explainer. Today, we're going to put on our automotive engineer hats, figuratively, of course, to objectively break down the actual mechanical systems of modern financial fraud. We'll look at how these systems operate under pressure, pinpoint exactly where they fail, and most importantly, show you how to make decisions based on hard data rather than manufactured emotion. All right, let's jump right into it.
Okay, let's dive into this. Hollywood feeds us this incredibly glamorous myth, right? Think about those fast-paced, 90-second phone call scenes in movies like The Wolf of Wall Street. Now, those scenes are actually incredibly dangerous, not because they show fraud, but because they make it look so easy, so glamorous, and almost logical. Cinema makes the victims look naive or just inherently greedy, like they kind of deserved what happened to them. But the harsh reality, it's clinical. Real financial fraud is an expertly engineered system explicitly designed to trick highly educated, intelligent professionals.
I want to ground the stakes here immediately. $200 million. That's the estimated real-world financial loss caused by Jordan Belfort's scheme alone. While audiences are sitting there eating popcorn and processing this 3-hour cinematic spectacle, real people suffered absolutely devastating, life-altering losses. So this isn't just movie trivia. It's a very real machine that literally ruins lives.
So here is our roadmap for today. First, Hollywood's most dangerous illusion. Second, the anatomy of a modern scam. Third, the psychology of social proof. Fourth, why today is much worse. Fifth, the power of true believers. And finally, the 4-question reality check.
Part 1. Hollywood's most dangerous illusion, the myth of the naive victim.
You see, Martin Scorsese's camera deliberately pulls your eyes toward the yachts, the Lamborghinis, the wild parties, but that's just a smokescreen. The reality is that the scheme is specifically designed to exploit rational thinking, not to bypass it. Fraudsters actually weaponize the very things that smart people trust. Think about it. When someone shows you 3 months of seemingly credible price data, a sophisticated technical analysis, and this really logical narrative about why an asset is undervalued, well, your brain naturally treats that as solid evidence. But it's not evidence. It's highly engineered bait.
Part 2. Anatomy of a modern scam, the 5-step mechanical breakdown.
Now, what's really interesting here is that the screaming 1990s boiler room full of aggressive salespeople, that's entirely gone. It's been replaced by these exact 5 mechanical phases operating quietly right on your social feeds. Step 1. Find a low-liquidity asset. Think of an obscure microcap crypto token, where even a tiny amount of money moves the price wildly. Step 2. The fraudster accumulates quietly. They buy up a massive position over weeks before anyone even notices. Step 3. Create the narrative. They don't just say, buy this, they say, hey, I've researched this for 6 months and found hidden alpha, which basically means an exclusive insider edge. Step 4 is the pump. They blast that narrative out across social media to thousands of followers. And finally, Step 5, the dump. While everyday retail investors are rushing in, celebrating the rising price, the fraudster is quietly selling their entire position right into that buying pressure.
Part 3. The psychology of social proof, manufacturing consensus at scale.
To really understand why those 5 steps work so flawlessly, we have to look under the hood at the psychological engine driving them. Belfort wasn't just motivated by money, He sought absolute control over people's realities. And the core human vulnerability they exploit to do this is social proof. Basically, this is the psychological mechanism where we look at the behavior of the crowd to figure out what the correct action is in a given situation. If you see a massive crowd buying a stock or a token, your brain completely bypasses critical analysis. It just interprets the crowd's action as evidence that buying in is the safest, most logical move.
Fraudsters take this social proof and they weaponize it into what we can call FOMO engineering. They manufacture this absolutely terrifying illusion that everyone else around you is getting incredibly wealthy, and you, somehow, for some reason, are the only one being left behind. And make no mistake, this engineered fear, it works on absolutely everyone, regardless of your IQ or your education level. It's a staple ingredient in literally every single financial fraud operating today. Part 4. Why today is much worse, the escalation of digital fraud. And this brilliantly illustrates the terrifying present. A really common question we get is, well, how do these scams still happen with the SEC monitoring markets and digital paper trails literally everywhere? The reality is it's happening right now at a much larger scale, and it's vastly harder to prosecute. Look at the speed. In the 90s, a pump and dump took weeks to pull off. Today, a crypto pump takes maybe 4 hours. Regulators can't even identify it before it's completely over. And the reach is just staggering.
A 90s boiler room had maybe a few hundred brokers, but a modern financial influencer, they can have 500,000 followers, and they pay absolutely nothing to acquire them. For legal cover, modern scammers just slap that magical phrase, "not financial advice," on their posts, which creates instant plausible deniability. And jurisdiction, instead of being confined just to the US, these schemes now operate seamlessly across 20+ countries simultaneously.
Part 5. The Power of True Believers, the Unwitting Distributors.
You know, the one terrifying thing the movie actually got right was the absolute, unshakable conviction of the people selling the lie. Because the most dangerous component of fraud actually isn't the fraudster, it's the true believers. Financial manipulation is incredibly persistent precisely because it relies on ordinary people who genuinely believe the viral investment trend. They consume the narrative so completely that they become unwitting distributors. They spread the manipulation across their own networks for free, completely unaware that they're participating in a scam.
To fully shatter that Hollywood folk hero myth, just look at the brutal reality of restitution. Belfort served just 22 months in prison and was ordered to repay $110 million to his victims. Yet, he's repaid less than half of that. That gap right there, that is the unresolved reality for the victims who are still waiting and, honestly, likely will always be waiting to be made whole.
Part 6. The 4-Question Reality Check, your 30-second defense framework.
All right, we've mapped out the system, and now here is your engineer's toolkit. This is a practical, actionable checklist you can apply to evaluate any investment opportunity in just 30 seconds. Question 1. Who benefits if I buy this? And I don't mean who benefits in theory if the price goes up. I mean who has already accumulated this asset quietly and desperately needs new retail buyers to step in and act as their exit liquidity. If you can't clearly answer that, you don't understand the asset well enough to invest.
Let's move to question 2 and see how this builds. What is the specific mechanism for a price increase? Vague buzzwords like mass adoption or community growth, that's exactly where fraudsters hide their schemes. You need to look for concrete, specific mechanisms. Things like verified revenue growth, audited institutional buying, or tangible user acquisition. If it's a vague thesis, it's almost certainly a scam.
Question 3. What does the downside look like? Look, every single legitimate financial analyst on Earth will map out the risks and tell you the downside before they ever pitch you the upside. If you're reading a thread or watching a video that only talks about how much money you are guaranteed to make, well, that's not an analysis. That is a targeted sales pitch.
And finally, question 4. Am I being rushed? Artificial urgency is literally the loudest alarm bell in finance. Legitimate investment opportunities do not expire tomorrow morning. If you're feeling a sudden, intense pressure to make a financial decision quickly, realize that the pressure itself is the actual product they're selling you.
So the takeaway here is that the difference between a victim and an investor isn't intelligence. It's having a reliable framework. You really don't need a Wall Street pedigree or an advanced degree to stay safe in modern markets. You just need to run those 4 simple questions to objectively evaluate the system under pressure before you deploy your capital.
So the crucial point is this. The next time a viral investment trend floods your timeline, backed by shiny charts, thousands of screaming comments, and overwhelming FOMO, will you be the rational engineer testing the system, or will you be the exit liquidity? Keep this framework in mind, scrutinize your feeds, and stay sharp out there. Thank you for joining me on this explainer.